In today's video, we're going to talk about trading the weekly expansion. Now, the only information you can probably get from a weekly candlestick is the open, low, high, close, and the open, high, low, close. Now, a bullish weekly candlestick would open lower, paint a low, and you see an expansion higher to create the high. Then finally, the price will close higher than where it opened. And for a bearish candlestick, you see an open, a high, a low, and then a close. Now, a weekly candlestick begins on Sunday, okay, and ends on Saturday. So we have 7 days that make up a weekly candlestick. In case you didn't know, well, now you know. So we have the open here, the high, and the low, and finally the close. And so primarily trading the weekly expansion, I'm gonna focus this on daily candlesticks, okay, on the daily chart, determining the weekly expansion on the daily chart. And so here I have a daily chart, and I'm gonna review the past 3 weeks, okay, from last week and the week before and the week before. Now on this particular one here, it's from 3 weeks ago, okay. So what happened is the week opened here with this candlestick. This is the first day, this is Sunday, and price went lower and went, to get that sell side liquidity, retrace back inside the range to this bearish Beverly gap, and price sold and finally closed right there below the opening price. Hence we have a bearish weekly candlestick. Okay, now from the looks of it, you see that it's more like a pin bar, right? You see a rejection up and a rejection below. So price went lower, rejected, going up, went up higher, so rejection and went back lower, and so it closed somewhere around the same area as the opening price. So this is how your price would have looked at the very first day, that is Sunday. Okay, this is the information you would have had on the daily chart. So this is like a Saturday candlestick here. So what happens is when a new week begins, that is on Sunday, which is going to be a new daily candlestick right after this one, information that you have currently would be, you see sell side liquidity and the fair value gap here, because this candlestick is already closed. So you see fair value gap, you see sell side liquidity. Okay, so I guess you have to theorize, you have to come up with a very logical reason as to where the weekly candlestick is likely to expand to based on your daily structure. Now remember, from where we came from here, price actually took out buy side liquidity, relatively core highs, and then started to expand lower. So this is from a reversal, okay, to got buy side liquidity, and then we had a reversal going down. Now remember, price will move from buy side to sell side, and from external range liquidity to internal range liquidity, okay. And so as you see, right, with now all this information on there, what you're saying is that price on the very first day, which is Sunday, continued. You had a continuation of that bearish order flow, take out sell side liquidity, and then for some of the days, the next few days, you see a retracement back and price rebalanced the fair value gap. But then we did not get an expansion towards sell side liquidity, because as you know, when price has rebalanced the fair value gap, the expectation is that we should see an expansion towards liquidity. So in this particular case, we should see an expansion towards sell side liquidity, but we did not. We failed to see an expansion in the form of, say, see how this expansion lower, this expansion lower here, this expansion low. So we wanted to see similar price action from that fair value gap to this low, big large range down candlesticks, like in this multiple cases here. And so what is the reason for that? Well, we had resistance, or we had no an opposing PDRA in the form of that weekly bullish fair value gap. Okay, so we have a bullish fair value gap. So we have two contrasting PDRAs, one on the weekly. So the weekly is saying buy, the daily is saying sell. So the daily bearish fair value gap, the weekly bullish fair value gap. In this particular case, which one takes precedence? That's right, it is the weekly time frame because of the hierarchy of time frames. And so we see price actually finding support on that bullish weekly fair value gap and then going a bit higher. Hence, we see higher prices, right? Remember, we closed on this candlestick for the previous week. Okay. Now we're on the next week, right? The week before last week, and it opens right here. And so it respected, or it was just that big where we had a respect of that weekly bullish fair value gap. And so instead of actually, let me show you how price looked like before all of this, right? This is what it looked like. So at the beginning of the week, of the new week, weekly candlestick, the information that you have currently on the daily structure is you see sell side liquidity, and well, buy side liquidity there, and that bearish order block. Okay, and because of the weekly bullish fair value gap, we see price going higher. Mind you, this time around, unlike here, price did not immediately take out the low, the sell side liquidity right there. Unlike last week where we see actually price breaking that low. So what does price go for? It goes for buy side liquidity and then sells off on that bearish order block. And then of course, you see now it's reaching for the sell side liquidity, but it closes just above that low. Okay, now bear in mind what price does each week that we're reviewing. We open here, we go higher, right? So buy side liquidity, and then the bearish period is where we sell from after taking out buy side liquidity, and then we're targeting sell side liquidity now, but we close just above it, so we do not actually take it before the week closes, before the week ends. And this is how the week candlesticks look like, right? Major this big wick right there shows they had a reversal up there, like price went higher, then reversed, and then finally closed below the opening price. Now for the final week, which is last week now, remember it closed right there, right, just above the sell side liquidity. And so just like the week we just did before this one, when the new week begins on a Sunday, we take out that low, right? We take out that sell side liquidity and see a retracement back up to this bearish fair value gap and a continuation. You see that some more expansion to the downside now to external range liquidity. Now, of course, this is what it looked like before, right? Before or at the beginning of the week, at the beginning of the weekly candlestick, at the first day, or what you had at the time on a Sunday before, or at least at the close of Saturday, at the close of the weekly candlestick, you see sell side liquidity, and well, fair value gap had not yet developed, and that external range liquidity as well. So we're coming from that bearish order block, and we're targeting sell side liquidity. And of course, see, we saw that Sunday open, taking out that low, and then retrace back inside the range, do a bearish fair value gap, and an expansion towards external range liquidity. So here's what I want you to take away. Each week has its own objectives. Okay, each week has its own objectives. Bear in mind that beyond just knowing or just using the weekly path tree, right, for the base of where to find your entry or where it's most likely to be profitable to sell from. There's also a question of where, because we're trying to find out where the weekly candlestick is going to expand to. From the daily time frame, you're going to get information, or you're going to have levels and price that will give you some information on where the weekly candlestick could possibly expand to, right? And take for example the first week that we reviewed, right? Because the first day of that week we took out sell side liquidity, and mind you, just after we took our buy side, then we took our sell side, and also the way that it looks, this was just a significant break in structure. As a retracement back inside the range would be expected, right? Would be expected, and a continuation from there as well. Definitely expected. Like I said, I expected to see some more expansion from that bearish fair value gap over there. But come to find out, when you take your fib from the high to the low here, okay, you find out that this was around, equilibrium was around here. So price had not actually went into premium. Okay, so the consequent encroachment of this fair value gap is actually right about the same level as equilibrium of the range from the high to the low here. It's always important, especially after bringing structure. Usually you're gonna see a retracement into premium or into discount, depending on whether it's bullish or bearish. Okay, and so in this particular case here, that bit of sell-off there wasn't actually from a premium level per se. Only just a tiny bit of the wick of price had wicked into premium, so makes sense. Anyway, we had an opposing weekly PDRA which sent price back up higher. If there wasn't one, as I previously stated, price would have actually just continued with an expansion going down lower, right? But you know, there was that as well. And so that week, for those 7 days, all price did was break structure, trace back inside the range, and rebalance that fair value gap as well, sell until it closed here. And for the next week, all price did was take out buy side liquidity, sell from that bearish order block, and almost take out that sell side liquidity. Okay, almost. Then for this weekly candlestick, all price did was take out sell side liquidity, trade back inside the range, and expand from there to take out that external range liquidity. It's significant, mind you. This external range liquidity is not like all these other highs and lows within the range, because overall price has been actually consolidating on the daily, on the weekly, just like last year. And for some bonus content, okay, let me leave you with this. Now, I'm currently in this trade, okay, so I'm going to give you a few pointers on how trading this price action here would essentially be much easier, very even simpler, if I would say, if you stick to the stuff that I talked about in that video, the way the market moves, right? Just these three things over here. I follow this three to the T, and I'm never disappointed. Okay, I have much better success now that I follow or have a system that I follow, and I found out that certain things just repeat endlessly in price. Okay, and if you just find something that works for you, you stick to it and you do not deviate at all. Let me tell you one thing. First of all, the low here, right, it's external range liquidity. So there's a couple of things to look at this. But currently, the number one that I would go to first is that fact that remember when it comes to narrative, we said that you have to answer some of these simple questions, right? Or at least when price is taking out liquidity, you should expect it to retrace back inside the range. And that's what price has done here. We've taken out the liquidity, retrace back inside the range. But now, when you look at it officially using this three here, this is how it is. Number one, premium to discount to premium. Okay, where's your dealing range that you could look at? You see a high, see the low. If you take your fib from the high to the low, you want to see price going from discount into premium. Number two, we have taken out external range liquidity, as I've stated before, and price will move from external range liquidity to internal range liquidity. In this case, external range liquidity is the sell side liquidity here, and internal range liquidity will be this fair value gap here. So you want to see price moving from this low to this fair value gap, and that's what price has done. Then number three, buy side to sell side to buy side. Okay, previously, remind you when we just reviewing this the past weekly candlestick, price took out buy side liquidity, then went for sell side. All right, price. So in this case here, we're taking out sell side liquidity. Wait, is it? Oh yeah. So we're taking out sell side liquidity, and we could reach out for buy side liquidity, but that's more of a reach because we're more interested in this range. Price could still continue going down low, and so all the trades setups that I have framed or that I've been a part of, okay, essentially I was part of this sell too. It's just price moving from internal range liquidity to the external range liquidity. There was another post on their sell too here because we're taking out buy side liquidity, so I want to see a sell off into sell side liquidity, or I say internal range liquidity, right, from external to internal, all those kind of things. Stick to what works. These three here, if you use them religiously, you always know where price is going. So until the next video, you have a good one.